Ark Invest CEO and billionaire Cathie Wood believes this stock will create millionaires. She urges investors to move fast before missing out on what could be the next TSLA.
Tesla,
Yes.
you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car and it's really terrific. It's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast, and the numbers have gone up dramatically, and yet, we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose a third of its market share. It had in 2018 17% global market share, including China. That it would lose as the Tesla killers came into the market, Audi and Porsche Taycan and Jaguar. Well, guess what? Its share increased last year to 18%.
So you think Tesla can have 17 or 18% of the worldwide market when it's all electric vehicles? Is that what you're saying?
And if we are right, this stock has only begun.
Before we move on, please don't forget to hit the like button, subscribe, and hit that little bell at the upper right part of your screen. Cathie believes Tesla will remain to be one of the strongest companies in the next 5 years. She said, based on Ark's published long-term forecast report, Tesla's numbers have gone up dramatically, with shares increased to 18% last year in the worldwide market when it's all electric vehicles. There are two secular trends for inflation. The first one is disruptive innovation competing with traditional companies, which forces prices to be lowered due to higher competition. One instance of this is in the auto industry. Gas-powered vehicles have to compete with electric or hybrid vehicles. This new and growing competition means that gas vehicle prices will have to be lowered in order to compete. The second trend is the fact that improving technology allows for lower prices due to production efficiency. EVs are the perfect manifestation of lowering prices. Battery prices are declining year after year, which is allowing EVs to be more accessible to the public. Within the next 18 months to 2 years, the price of an electric vehicle is going to drop below that for a gas-powered vehicle for the first time, and it will continue to fall because we're riding down the battery cost curve decline. According to the Ark CEO, there are 3 major advantages Tesla has. First is batteries. Second is their own artificial intelligence chip. And then the last is Tesla is the only auto manufacturer that delivers over-the-air software updates to modify performance. However, Cathie believes that the biggest upside surprises are going to come from the genomic space. And that's because the convergence of DNA sequencing, artificial intelligence, and gene therapies, and importantly CRISPR gene editing, are going to cure diseases. She said, we now have real science and technology surfacing the mutations in our genomic profile, and as they surface, we see the earliest manifestation of disease. With the combination of artificial intelligence and gene editing, we're able to both anticipate diseases and cure them potentially. In an interview, Cathie Wood also clarified a surprise in her portfolio attribution. She said Apple, Microsoft, Amazon, and Facebook aren't bad stocks at all. She said, in fact, they've been very good stocks and they were a part of their portfolios in the early days. But as they were scaling into the trillion-dollar category, Ark believed that their research would be focused better on the next set of fangs, which is the genomic age. According to Cathie, if you'll notice Ark's flagship portfolio, the largest exposure is healthcare for that reason. However, she said, What would consider her to move back into that ilk of stock is a continuation of what we're seeing now, so that some of their valuations become stretched beyond ARK's minimum hurdle rate of return. The minimum hurdle rate of return for any stock entering their portfolio is 15% at a compound annual rate over the next 5 years.
Part of what's going on is tax loss selling. That's just a technical factor. Beyond that, I think that the fear of inflation and interest rates rising, especially after Chairman Powell declared that perhaps inflation is not transitory here, has scared the financial markets. This really started in mid-February, this correction. So this is a very long correction for us. We actually think the bigger risk is deflation by far. I disagree with Barry completely on this, and I look at these rent increases as major tax increases effectively on the lower income earners, and the same thing with gasoline prices. The University of Michigan Consumer Sentiment Index is lower now than it was at the depths of the coronavirus. Why? Because purchasing power is diminishing here so much. I also think that businesses that have spent the last year and a half scrambling to catch up with consumption, they were way behind, are now overdoing it. And we are in the middle of a major inventory build that is going to unwind next year. So that will be a cyclical deflation. And then innovation itself is inherently deflationary. We're seeing, just to give one example, artificial intelligence training costs dropping 60% per year.
The fear of inflation and interest rates rising has scared the financial markets. The bigger risk is deflation by far. The University of Michigan Consumer Sentiment Index is lower now than it was at the depths of the coronavirus. Why? Because purchasing power is diminishing so much. Cathie also thinks that businesses that have spent the last year and a half scrambling to catch up with consumption are now overdoing it. We are in the middle of a major inventory build that is going to unwind next year. So that will be a cyclical deflation, and then innovation itself is inherently deflationary. For example, we're seeing artificial intelligence training costs dropping 60% per year. And AI is going to permeate every sector, every industry, every company. It's going to become very competitive, and that's just symptomatic. Because there are so many other deflationary forces associated with DNA sequencing, robotics energy storage, and blockchain technology. What we're also seeing is the convergence between and among these various innovation platforms, so that one S-curve is going to feed another. And so people are asking, why are these stocks going down? Cathie explained we're not in a bubble. And now that our stocks are down, but the averages are up, many people are thinking we're in a bubble still. And we are. And it's called the benchmark stocks, which are going to be disrupted as the traditional order is disintermediated. In many cases, it's going to be destroyed by this new world. But those are two deep, massive secular deflationary forces. One is extremely positive, deflation, learning curves, cost declines, price declines. In innovation means we'll get a boom in innovation. The other side of that is that there are many companies who are scared and they want their profits now and didn't invest enough in innovation. They're going to face a lot of problems and they will face a bad kind of deflation. We are all about finding the next big thing. The next big things involve our 5 disruptive innovation platforms like DNA sequencing, robotics and collaborative robots, energy storage, electric vehicles, and blockchain technology. Genomics is the most underestimated and misunderstood of our disruptive innovation platforms. And the reason is we have never been able to really cure diseases. Now that we're able to isolate mutations through DNA sequencing, we are able to understand where the programming errors in our genome are. CRISPR-Cas9 owns the patents. With CRISPR gene editing, increasingly, we're beginning to believe we're going to be able to correct those programming errors, according to Cathie. We might cure diseases like pediatric blindness, sickle cell anemia, beta thalassemia, and leukemia. In terms of profits, Cathie explained, with a 10% royalty on any therapy derived from CRISPR-Cas9, investors would have accumulated $200 to $300 billion in market cap. She said today the three stocks, Editos, Intellia, and CRISPR Therapeutics, can barely manage to get $5 billion cumulatively. There's a lot of fear about genomics because of a lack of understanding, and it also seems so complicated. However, Ark's Invest mission is to educate. Cathie said Ark's genomics analyst, Simon Barnett, is going to start a program to break this down and help people understand it because it's so important. Let me know your thoughts. Comment down below. If you like this video, again, don't forget to hit the like button and subscribe. This is your Top Tech and Trades channel. Thank you for watching, and I'll see you in the next one.